Good morning. I say morning, it's just about morning. It's 11:46 in the UK on Monday, 24th of January. I've waited a little bit to do my video this morning just to see what developments we have after last week's big plunge in the stock markets, which of course was as expected. We were getting into shorts around this area. This is the weekly chart for the S&P. We were getting into shorts around 4,600, expecting a 200-point drop, which of course we got, and we're kind of hovering around that area. The only support that I see now, we'll have a look at the daily chart in a minute and see what support has been broken on there. The only support I see now is this, which is the 200-day moving average that's actually the 50-day moving average on 50-week moving average. Let me get this right. 50-week moving average on the S&P, the red line. So we'll see if that holds. I don't personally think that I would want to be buying into a long position there. There's nothing else to support that. It's literally just the weekly moving average. I would want to have one or two other reasons to see that as a strong support level, and they're just not there. On the daily chart, let's go to the daily chart. For the S&P, we have broken lower, broken the 200-day moving average here, the green line. And obviously the 100 and the 200. So we really are looking very negative. I think we could drop another 200 points this week in the S&P. I don't see any reason why not. Getting oversold on the slow stochastic, but nowhere near severely oversold enough. Looking at the 4-hour chart, again, breaking lower, breaking trend lines. We're getting negative moving average crossovers now on the 4-hour chart. So to me, it all looks negative. I am still short. I actually was trading that £2,000 account that I'd got up to 3,300 a while back, and I was doing some videos on it. I didn't trade it over December, obviously, was quiet. I've just picked that up again. Initially, I dropped a little bit of money, but then I got it back. I got it to 3.3. But as you can see, the equity now is over £6,000. So I've just been selling the S&P as I was supposed to have done, around sort of 45.80, 4,600, and it's obviously dropped off. So my profit is now up to 3,300 on the account. So I'm up to £6,000. I started off with £2,000 back in November, and I'm just starting to trade that account again. Nasdaq 4-hour chart looks pretty negative. On the daily chart, we see the market breaking down. For the Nasdaq, right? I had a good support level around the 14,400 area. That was the low on Friday. We haven't pierced it yet, so that support is still holding. It's quite interesting. We're unchanged on the day. We've probed up, we've probed down. We're unchanged on the day. So we'll see if the Fibonacci level holds. I wouldn't be surprised if it holds for a little while. It's slightly confusing because I think this could hold, whereas I think the S&P is going to go down. But then the Nasdaq has come a lot further. If we were to hold here, there is always that sort of head and shoulders top pattern that could develop. This could be the left shoulder, the head, and then a right shoulder could develop, but I'm speculating. We're nowhere near that at the moment. On the US 30, again, that's been holding up slightly better, although we are seeing accelerated moves to the downside and just breaking that trend line, which goes back to the end of September, which would certainly be a negative. Germany 30 is also broken down. We had great support around the 15,600 area, which held so well for so long. The moving averages in particular doing a good job there. And of course, we've broken down now, and my guess is we're heading for 15,000 on the German DAX or the Germany 40. Gold, usually one of my favorites, so I will cover it, but I'm struggling. And look at what's been happening. We had a good run and then a big pullback. We finally get a decent up day, followed by a pullback, a decent up day, followed by some sideways action. There just really isn't a very clear trend or pattern to follow. We're struggling to get anywhere near the high from back in the middle of November. I thought the break above this peak here, the 3rd of January peak, was going to be very bullish with that big green candle, but it wasn't to be. We're only just pulling back now and just trying to hold that level, but I wouldn't even be surprised if we dropped down to 1800. So on the daily chart, there really isn't any clear trend or pattern to follow. I mean, when you scrunch it up, okay, yeah, that was a slight bull trend that you can say that we are in. But when you go back to June last year, we're just in one big sideways trend. And of course, the dominant factor here is the trend line that I've got on here that goes back to the 1st of September. Look at that. That's what the bulls have to overcome, which is around 1850. We're going to have to really get through 1850 for this to turn into a decent bull market. And for me, the only significant areas of support are around 1800, where this moving averages are all coinciding in the sideways trend. The fact that the moving averages are going sideways on the daily chart, of course, very clearly shows that we are only in a sideways trend. Slightly more upward move on the 4-hour chart for the moving averages, but nothing aggressive. So yeah, I'm not really getting involved in gold because there just are not any strong enough signals, and also the currency markets are really only just trading sideways, so it is a matter of scalping those. Okay, I hope that helps. We'll chat again tomorrow.